of work in tandem with this is very, very important. I think it's really important for us to recognise, as we have, the independence of the central bank, the very high standard of regulation there is, but also the diversity within the credit union movement, who are very different, financial institutions of very different size and very different scale, and require, in many cases, a different form or a nuanced form of engagement that provides the best support to credit unions, while also providing a robust regulation that protects members. And that's very much the thrust of what we're trying to do here. And the central bank, I know, are keen to make sure that that works as well in an appropriate way.
I must put the question that Section 3 as amended stand part of the bill. Is that agreed?
Yep.
Agreed. Section 4, Amendment 3, in Anamantara. As already discussed with number 2, and the question is that the amendment is made. Is that agreed? Number 4, Amendment number 4, as already discussed with number 2, the question again is that the amendment be made. Agreed? Amendment number 5, as already discussed with number 2, the question is that the amendment be made. Is that agreed? Agreed. Section 4, Amendment 6, in Anamantara, as already discussed with number 2, the question is that the amendment be made. Is that agreed? Agreed. That's, Section 4, Amendment number 6, in Anamantara, as already discussed with number 2.
Yeah.
Agreed. Amendment 7, again in Anamantara, as already discussed with number 2, the question is that the amendment be made. Is that agreed?
Can I ask him just Amendment 7? I have no problem with the amendment, but just the numbering of the amendment. So we're replacing 7 and 8 with 10 and 11. Is there something going in between? Because then we go from 6 to 10. Just is there a rationale for that?
In terms of the sequencing of the amendments, it is, because it is difficult. The amendments are going all different places. Yes.
Yeah. No, this isn't the amendment. This is the subsection. So we're replacing under Section 6. We're replacing subsection 7 and subsection 8 with subsection 10 and 11. So it will now run from 6. Is it the original? I'm just wondering why that is.
It's just to do with the drafting because they're amending the existing Credit Union Act. So forgive me. It's to do with the drafting, Deputy, because we're amending the existing Credit Union Act. So we're amending the amending act of the original act, and it's to do with the sequencing of that.
The numbering will follow on once the amendments.
The numbers will change again.
The numbers will work in the consolidated version, but this is the problem with this sort of amending legislation, that you're amending an amending act to an amending act. It doesn't draft well. It doesn't draft well, but it works in sequence.
Is that agreed?
Agreed.
I must put the question that Section 4 as amended stand part of the bill. Agreed? Agreed. Section 5, no amendments, and the question is that Section 5 stand part of the bill. Agreed? Section 6 in Anamantara, Section 5, Section 5 stand part of the bill. That's agreed, I presume. And in respect of Section 6, Amendment 8, 10 to 13 inclusive, 16 to 23 inclusive, and 46 are related and will be discussed together.
I move Amendment 8, and that amendment is grouped with all of the amendments in Group 3. The grouping addresses the following issues: changes to the first schedule to take account of corporate credit unions, the inclusion of a new 6th schedule which will set out the rules of a corporate credit union, membership of a corporate credit union, the range of bodies that can be considered for membership of a credit union, provision by ministerial order to designate certain public bodies as being eligible for membership of a credit union, removal of operational tasks from the Board of Directors, changes to lending processes to allow for loan participation and loan syndication, amendment to Section 36 regarding revised processes for loan approval, and that amendment is currently being drafted, and I want to signal will be brought in at report stage. Amendments to Section 37 regarding a broadening of the membership of appellate bodies, and consequential amendments following on from the establishment of corporate credit unions, which affect a range of different sections.
Any comment? Is that agreed?
Agreed.
And that Section 6 as amended stand part of the bill. Is that agreed? Agreed. Section 7, amendment number 9 in Almantara, as already discussed with number 1. And the question is that the amendment be made. Is that agreed? Agreed. Section 7 as amended do now stand part of the bill. Is that agreed? Section 8, no amendments. That section 8 do now stand part of the bill. Is that agreed? Section 9, amendment number 10 in Almantara, as already discussed with 8. Then the question is that the amendment be made. Is that agreed? Agreed. Section 9 still, amendment 11, as already discussed with number 8, and the question is that the amendment be made. Is that agreed? Agreed. Section 12, amendment 12, as already discussed with number 8, and the question is that the amendment be made. Is that agreed? Agreed. Amendment 13, as already discussed with number 8, and the question is that the amendment be made. Is that agreed? Agreed. And that section 9, as amended, do now stand part of the bill. Is that agreed? And section 10, no amendments. Is section 10 agreed? Section 10, that section 10 stand part of the bill. Is that agreed? Section 11, amendment 14, in Almantara, new section 14 and 15 are related and will be discussed together. Almantara.
Thank you. I move amendment 14, and that amendment, as you said, is grouped with all the amendments in group 4, 14 and 15. The grouping addresses the following issues: some changes to the nomination process and changes to the process for small payments on death. And I simply want to highlight that this arose out of a concern of mine that the nomination process could be tighter and aligned more to the signing of a will. So it will require now that there are 2 witnesses to the signing of a nomination, neither of whom is a beneficiary. And those witnesses could, for example, be the staff of the credit union. It's not to create a more onerous set of processes for the credit union, but it is simply to tighten that process, which is a very important process to very many people who, take great comfort in it. But I do think it needs to be more aligned with the signing of a will, and so that's the purpose of those, the broad purpose of that.
Agreed? All right. Okay. Section 10 do not stand part of the bill. That's agreed. Section 11, an elementary new section, as indicated already, is that agreed? 14 and 15 are related and are being discussed together. Agreed? That section 11 now stand part of the bill. Is that agreed? Section 12 in Almantara, new section as already discussed with 14, and that the new section be there inserted. Is that agreed? Agreed. That section 12 stand part of the bill. Agreed. We're going well. If we keep this up now, we'll we'll do very well. Thank you all very much so far. Section 13, no amendment. Is section 13 agreed? And the question is that section 13 do now stand part of the bill. Is that agreed? Section 14, 16, Amendment 16 in Thara, as already discussed with number 8, and the question is that the amendment be made. Is that agreed? That section 14 as amended stand part of the bill. Is that agreed? Section 15, no amendment in relation to section 15. That section 15 stand part of the bill. Is that agreed? Agreed. Section 16, Amendment 17 in Almantara, as already discussed with number 8, and the question is that the amendment be made. Is that agreed? It has to be agreed. Of course, it's agreed. You're very agreeable. Agreed. Amendment 16 continued. Amendment 18 in Almantara, as already discussed with 8, and the question is that the amendment be made. Agreed? Agreed. Amendment 19, as already discussed with number 8, and the question is that the amendment be made. Is that agreed? Agreed. 20, also in Almantara, as already discussed with number 8, and the question is that the amendment be made. Is that agreed? And the next question is that the section 16 is amendment do now stand part of the bill. Is that agreed? Section 17, Amendment 21, Antara, new section, as already discussed with number 8, and the question is that the new section be there inserted. Is that agreed? Agreed. Amendment 22, in Antara, as already discussed with number 8, and the question is that the amendment be made. Is that agreed? That section 17 is amended, do now stand part of the bill. Is that agreed? Section 18, no amendment. Any comments? No comments. Section 18 is agreed. Section 18 now stand part of the bill. Is that agreed? Agreed. Section 19, Amendment 23 in Element 3 in Elementara, as already discussed with number 8, and the question is that the amendment be made. Is that agreed? Then the next question is that Section 19 is amended, do now stand part of the bill. Is that agreed?
Amendment 19 or section?
Amendment, that Section 19 is amended.
Yeah, just on Section 19.
Stand part of the bill, on Section 19.
Yeah, Minister,
Doherty.
I would have, I would have been raising the issue in terms of high interest loans in terms of moneylenders and tabled my own legislation and had the government bring in some measures in relation to this area. However, there was a lot of work done by a number of individuals in relation to moneylenders and trying to encourage people not to use high interest loans and to instead use some of the other lower interest loans that are available, including from the credit union. And in one of the papers that were done in relation to this issue by UCC academics in 2017, and it was a paper that was commissioned by the SFI, interest rate restrictions for low-income borrowers. Among their recommendations was, in consultation with the credit union sector, that the Department of Finance consider increasing the monthly cap, the 1% monthly cap on interest rates for credit unions as per Section 38(1)(a) of the Credit Union Act 1987 for this type of lending to cater for a significant greater cost associated with small lending. So they argued two things. One is that high interest loans that are being charged by moneylenders at the time were not appropriate, to say the least, that there needed to be a cap introduced on them, but also that we needed to look at the cap. The only cap that actually applies in terms of interest rates in this state is on credit unions. There's no other cap. Moneylenders, there is now in recent years a cap on moneylenders, but before this there wasn't. And they argued that the cap in terms of credit unions need to be looked at again because it was a 1% monthly at 12% per annum. And look, anybody who's been 12% on a car or a holiday is a lot of interest and shouldn't be paying that, and credit unions don't charge that in the main interest. But if you're actually offering a short-term loan, then a 1% rate is maybe challenging for a credit union to offer that because of the costs of the loan in the first instance. So that's why they argued that it should be increased. Now this section 19, which I support, but it allows for the Minister for Finance to set interest rates in relation to this. So it would be an enabling section to allow the Minister to provide an increase in this rate. And while I support the increase in this rate in the context of money lending, we also need to be conscious that a lot of people are using the credit unions, and the last thing they want to see is their loans going up for normal duties, as is said. And I don't believe that the appetite is there with the credit union movement to do that anyway. But therefore, there has to be safeguards in relation to this. So my question to you is, in this section, which you're bringing forward, which is enabling legislation allowing for the Minister to set a maximum rate that the credit unions can charge in terms of a product, what recourse does that have to the Dáil, to any oversight or scrutiny in relation to that? Because it was stated by the Minister for Finance in the past, and indeed that would have been a previous Minister of Finance, because this issue has been ongoing now for half a decade, if not more, that this was going to be done by primary legislation. It's not been done by primary legislation. It's been done by it's an enabling now, enabling provision in primary legislation. So that's fine, but what is the oversight in relation to what is a really important matter in terms of a finance minister in the future increasing the rate, for example, from 1 to 5. You know, like, I'm not saying that anybody would, but there has to be some oversight. So if you wouldn't mind maybe talking us through the implications of that section and how that, what oversight, if at all, is contained within the section in terms of the Oireachtas. Thanks.
Thank you, Daddy.
Yeah, that is,
Tara.
thank you. The requirement is that, you know, that they would be on advice from CUAC. There would be a dialogue with CUAC in the first instance, but your question is in relation to the Oireachtas, and you're right, we're making enabling legislation that doesn't have recourse to the Oireachtas. My own view of it is that I don't imagine a minister doing this without a statement being made to the Oireachtas, because I think it is very important. You've identified exactly the quandary that is there. You're trying to keep people away from money lenders and the very high interest rates that are charged, and yet you don't want to create an additionally high interest rate environment for other borrowers, other lenders, and it's a dual problem. And I know you've done a lot of work on it, Deputy, and indeed I've done a lot of work in another context, so it is a difficult question, and it's one that I will be discussing with CUAC, but it is required, you know, it is, a minister would be doing that following a review with CUAC and following advice from CUAC. Could I reflect on that, Deputy, just in relation to the Oireachtas, and perhaps come back to you at report stage? I may not make an amendment at report stage, but I certainly hear what you're saying, and I'll reflect on it and come back to you at report stage.
Yeah, thank you, and thanks for your response. And look, I appreciate your comments in terms of reflecting on it, and obviously CUAC is an important player in relation to this, but the provisions of the bill do empower the minister to make the decision at the end of the day, even if CUAC is not supportive of it. So we just need to bear that in mind. And I'm not suggesting, like, there is one thing, and I've said this on numerous occasions, there is one thing across the political divide that I've seen in my time as finance spokesperson for 13 years for Sinn Féin, is there is broad support, cross-party support in terms of the credit union movement, and we want to unleash the potential of the credit union movement. So I'm not suggesting that this would happen, but in a provision like this, where you give the Minister for Finance the ability to set a rate for lending in a market, I don't think, as I said, I think the minister, whatever minister in the future, would do the right thing, but there should be an oversight, you know, whether that should be a resolution before the Dáil. It's a simple mechanism, and I think it would be just a safeguard in relation to that, given the importance of the matter. And the Minister for Finance doesn't have that power in any other lending environment. The central bank has it. The independence of the central bank is sacrosanct in relation to that, but it is... so I welcome your comments, and maybe we could look at that.
I think, if I may, the only thing that I might clarify is, of course, it's not the minister that would be setting it, but capping the rate.
Capping,
so,
yeah.
So not setting the rate in any
Yeah.
way. But I appreciate the broader governance question. I will reflect on it. But
setting a cap, sorry. Yeah, it would be setting
so it's a slight distinction, but
Yeah.
let me reflect on that.
Yeah.
I'll also speak to CUAC as well to get their thoughts on that as well.
Perfect. Thank you.
That is agreed. Agreed. And I put the question again that section 19 as amended be and do now stand part of the bill. Agreed. Agreed. Section 20, no amendment. That section 20 do now stand part of the bill. Agreed. And that's section 21, no amendments. That section 21 do now stand part of the bill. Is that agreed? Agreed. Let's run over the page and see what the amendment is here. Section 22, Inanimate Hara. As already discussed with number 1, and the question is that the amendment be made. Is that agreed? And section 22 as amended do now stand part of the bill. Is that agreed? Agreed. Section 23, Amendment 25, Inanimate Hara, and the question is that the amendment be made. Is that agreed? 23. Amendment 23, Section 23, yep. Amendment 25.
Sorry, my apologies. Are we dealing with the amendment or the section?
Well, there's no...
Section 23.
It is as discussed, or will be discussed.
You're dealing with the amendment?
What we have here is, we've finished section
amendment
22.
Agreed. Sorry,
and
amendment.
section 23 has an amendment, as discussed previously.
Yeah,
Right.
agreed.
Agreed. And that the section 23 as amendment do stand part of the bill. Is that agreed?
On the section, Chair, if that's
Yep.
okay. So obviously this is a core part of the legislation which allows for a credit union to refer a member to another credit union which is offering a service that they do not provide. So I just have And it's a very welcome section, obviously, that credit unions are working in collaboration, and it's not a straight refusal. It's we can't do it, but somebody down the road can do it, and you can be referred and you can be deemed a member for that credit union, as long as the service is provided, and only for the purpose of the service that you refer to. There's two issues that I want us to look at in relation to this section. One is, will there be any fees incurred by the member in relation to transferring from one credit union to the other, and how would that, if at all, be dealt with, and how would that be regulated? So just that issue in terms of fees. It would happen in terms of Main Street lending, where you would maybe move mortgages or accounts and so on and so forth. In this scenario, I understand that you would be a member of both institutions at the same time. So it's not completely similar, but you will be. Will there be fees applied, and how will they be regulated, if at all? And then the other question I have is, I'm just trying to think through in terms of somebody who goes to a credit union and they can't provide the service, but they're referred to another credit union for the service, and they're a member for that credit union for that service. But sometimes, you know, when you're with a credit union and you're applying for something and you find out, well, actually you have to do this and that, you know, and I'm just wondering, is that definition, would that require nearly somebody to go back and be referred for another add-on service or something like that there? So I'm just trying to think of an individual who the service can't be provided in Credit Union A, is referred to Credit Union B, but only for that service, but in the middle of providing that service, they need X as well. And that's the issue. Yeah, sorry. I'm finished now.
So a scenario in which Credit Union A doesn't provide mortgages and you're referred to Credit Union B, you get a mortgage, and then you also get a green loan for the, you know what I mean, that is either added on or ancillary to the mortgage. Is that essentially a scenario that might...
scenario of that nature.
Deputy, that would be for the framework agreement between credit unions. That would be for them to work out and regulate, to determine as between different corporate entities how that would work. So it's not a matter for the legislation, but a matter for that framework agreement. As to fees, again, you've sort of answered, I think, your own question in the sense that you're a member of both credit unions, albeit for a defined set of services in the second credit union. So again, while it's a matter for the framework agreement between credit unions, this legislation is enabling them to create those agreements. I don't foresee that, but it really is a matter for the agreements between the credit unions.
The principle of the credit union movement is to avoid unnecessary costs and fees anyway, so I would imagine the framework would reflect everyone's discussion here, which is to minimise it and to make it, the whole thrust of this is to make it possible that if you're a member of a credit union who doesn't offer mortgages or SME lending, that you can easily go down the road to the next one. I'm sure, yeah, there is issues around which road do you sent or which neighbouring credit union you sent on to, but naturally that can't all be in legislation. But I think the trust is for anybody here is that we want it to be the principal legislations that make it easier and simple to move. And I would assume, and I suppose we've put on record here, that the framework, which I suppose we can review after a period of time, would reflect that. I see no reason why it wouldn't, because credit union movement are fully behind all these changes, from what I can understand. There's a really positive vibe going on, which is brilliant with the department. Minister, you're reflecting that yourself and your team with the engagement of credit union movements and all the various sector bodies. So naturally, we all expected the follow-on then would be, which I expected, but maybe the answer to this would be that there's a built-in review, which I've no doubt, as Minister, you're going to be watching this quite regularly anyway. But I think we assume it, and assuming everybody says the same, and that's the trust of it. But probably no harm to build in a review here after 6 months or a year, and we can see, is this working to how we all hope it will be.
That's that's correct, and in fact, so our purpose here, and we're trying not to go too far. Our purpose here is to provide, as you've said, the broadest enabling environment. There is a huge enthusiasm among the credit union movement to take this and run with it, but of necessity, it is for them to work out the operation of that, albeit regulated by the central bank as is the normal course, but the particular commercial arrangements that they create between themselves and the referral pathways and the processes really are not a matter for legislation, absolutely, but very much a matter for the credit union to create and develop and allow to flourish themselves. Yesterday I met with 13 credit unions in Mullingar, and there's of varying sizes, and there's great enthusiasm about how they may step into that, to the next stage of the implementation of this legislation. But the Deputy is correct, and as we discussed at second stage, what happens if the opportunity created by legislation is not taken, and how do we assess and review that as members of the Oireachtas, this enabling environment that we've created. And so we've built into it that CUAC will conduct a review, an annual review of the implementation of the legislation, which will be provided back to the Minister and of course published, to allow us as legislators to assess the impact of what we have created in this enabling legislation. And then it's a matter for determining how well or otherwise we view that implementation is going relative to the overall strategy of creating and enabling a really strong community bank, which is part of the retail banking review strategy and, you know, our banking strategy for the future. We think that this enables that, but we can't set up these frameworks. We can't refer members for mortgages ourselves. Of course, it is for the credit union movement to step into that. From what I've heard from the credit union movement, and I see representative groups reflected here today, I've had letters from them in the last number of days. They're very excited. Indeed, they're getting ahead of this work with the establishment of the CUSO in the first instance. So they're ready to take this and go with it. But of course, we want to make sure that the opportunity is taken. And so that's why we've built in CUAC, who I think are an appropriate body to conduct such a review to assess it on an annual basis.
Thank you, Minister. Deputy Rose Conway-Walsh.
I just want to ask you, I mean, could something like this enable the facilitation of a product that would support the families and the homeowners that are impacted by pyrite and mica? Because we have the situation at the moment where the shortfall in the grant and what's needed for the rebuild and all that is falling very short. So I'm hearing from a lot of families who are really under pressure because they cannot get the facility from the banks. So would what we're doing here enable credit unions to come together to offer that facility? And have you had any discussions, I suppose, in the makeup of this legislation around such a product or such a provision?
I think what I would say is it enables the credit unions to come together in a whole range of different ways, whether it's the Cultivate loan, which is already the case, whether it's collective mortgage products. What I think is very important is for the legislation not to be prescriptive about the types of financial services that might be offered. But there is more still, So I wouldn't. This allows. I don't want to give an answer that says that this is going to be the solution to that. This enables credit unions to refer members more broadly, to create collective products, to share risk. But it is absolutely up to them to determine what those financial products or what needs in the market may or may not be met by individual or groups of credit unions together.
Absolutely, yeah. My read from it is that it would facilitate such a provision there, and obviously we would encourage that very much to be done as quickly as possible. Yeah. Thanks.
Very Doherty.
Yeah, thanks. And I understand there'll be a framework agreement, obviously, in terms of the credit unions and how this will apply intra-credit union. My issue here is in probably section 2, subsection A, where it says the receiving credit union may provide the service in respect of which the referral is made to the member concerned. And that's really important because credit unions don't want to lose the custom, okay? So they don't want you to go and get your student loan or car loan or holiday loan or whatever it is with another credit union just because they can provide one service. So I understand the concept and the importance of that. But I'm thinking of, and maybe there isn't an issue, and I think you mentioned in terms of reviewing this, it may be really important, but if you think of the mortgage market, which we're quite familiar with, so a lot of people go to a bank, they'll now go to a credit union, they may be referred to the credit union for the service provided, i.e. to get a mortgage to purchase a home, and they will only be deemed a member of that credit union for that service to get a mortgage for as long as the mortgage will exist. But as we know, as years go on, a lot of people may tap into their mortgage, may want to top up, which is not in a mortgage, but is a release of equity, which you can't really do with another financial institution because there's already a burden on your property with that institution. It's a separate service. Would that individual have to go back to the original credit union, be referred to the top-up? And that's just what, because it's very clear that it's for the service that they're referred to. And maybe there's no way around that, because there is a responsibility, you know, I agree with the sentiments here to make sure that, you know, you're not losing the custom for your local credit union, but you're also able to avail of the benefits of the credit union movement. But I'm just giving you an example like that, and there may be many other examples where this section here could be very, very specific, and I'm not sure if a framework agreement can deal with that. You know, maybe they can. It's in terms of loans and any future top-ups or whatever, you know, but I just think we need to make sure that it's as seamless as possible, and make sure that the legislation doesn't create an unnecessary burden where people have to go back to their original credit union and say, oh, will you refer me back for this wee bit, you know, because the original referral was for this service and the legislation doesn't allow me to go, you know, the service is now kind of gone a wee bit wider, and now I need to go back again and get referred, and what that actually means, because we haven't looked at the legislation as enabling legislation, so what that process means for an individual. I'm not even sure. Does that mean that an individual has to open a new account with another credit union, or does the initial documentation that they have with the original credit union suffice them for credit union, the referred credit union, or do they have to now go through the whole compliance procedure again? Bernard, your favourite issue, know your customer, you know, all of that over again. So, you know, so just it's not clear, and part of that's left for other. But so it's this section. It's just whether that it's so specific that it might cause an issue in terms of its implementation, where there's a variance of a service, or where there, you know, when you start to deal with somebody, you actually find out that maybe what they needed isn't exactly what they needed, and then they have to go back and get another referral. So that was just the point there, and maybe the best way to do is to keep it under review and look at its implementation. But I just wanted to flag that now.
I think on that too, it would be worthwhile for us it's not a select committee, but when we get into the framework stage, I mean, there's been a lot of positive engagement with the credit union representative bodies and sectors, that it might be useful for us personally that when we get down to the detail of the framework, that they actually would come in as well and we can discuss it here. Because it's legislation, while I totally agree with Piers, we don't want to put legislation in place that doesn't facilitate it and doesn't catch all the scenarios. But we don't want to do the opposite either. I've seen legislation in the past, certainly with relation to what credit unions could invest in when it came to housing, and housing bodies got very complicated over wards, and we didn't get the full benefits we could have got. So it's important, while we want to get it right, we don't want to tie it up the other way either. So I think a review, but possibly I think we should also engage with the representative bodies after this legislation is through around the framework, to make sure all our concerns are dealt with too, because I think we all want to see it working. Yeah. And why really, because so do the credit unions, but more importantly, we want the members of credit unions to have the full option and full opportunity to avail of all the services, be that a situation in relation to MICA or private, or moving away from a non-traditional bank lender which are mortgage, where people are being hit extremely high, which there's been a lot of discussion here as well. So I think we want to get the opportunities here, but not lose them either. I think that's a fair point. So just for a bit of work for ourselves as well.
I would think that's a very strong idea, because it is the framework sort of agreements that follow this legislation, or where the detail of that are properly worked out. As I said, at every stage we've tried to create an enabling environment and not be too prescriptive, and it really is a question for how that's dealt with thereafter. I would recommend perhaps including CUAC in that conversation, who will both be conducting the review and obviously are an ongoing advisory body, to make sure that the practicality of this works. But the intent, as Deputy English has said, is to make it work in an as frictionless and seamless a way as possible, from the perspective of the member, from the perspective of the resident, the citizen, the person accessing financial services. And if their local credit union does not offer a service, that they can be referred easily to another to avail of that service. And yes, I anticipate, it is already the case that a member of a credit union can go to, for example, Cultivate, that structure already exists in operation for slightly different forms of lending. So there are parallel structures already in being. But I really do think it's a question for the framework environment, for the framework agreements and how that is done, and strongly encourage that conversation to be held beyond this legislation.
Right, that's presume that the section, discussion on the section, and that still that section 23 as amended stand part of the bill. That is still agreed. Agreed. Section 24, no amendments. That section 24 do now stand part of the bill. Is that agreed? Agreed. Section 25, that's no amendments. That section 25 stand part of the bill. Is that agreed? Section 26, Alimentara, as already discussed with number 1, that the amendment be made. Is that agreed? And that section 26, as amended and discussed, is agreed. Do now stand part of the bill. That's section 26, as amended. Do now stand part of the bill.
On section 26. So this, I welcome this section. It obviously changes the requirement on credit unions, where currently all plans and policies and procedures has to be reviewed by the board annually at least in legislation, and it changed that now to 3 years, but actually drops the requirement for them to review procedures in its entirety. And maybe the Minister may speak to that. So it only now requires to review policies and procedures. So just to speak to what that amendment does there in terms of procedures. But the question I have is that the Central Bank doesn't have any requirement for periodic review in relation to its policies in terms of credit unions. And we see the impact that some of the policies are having on credit unions. We hear in our local communities, we hear it when some of the representatives come here in terms of lending limits that would apply during COVID, deposit limits and all that. There's a stipulation in legislation up till now, currently, that every board has to review their plans, policies and procedures every year. This legislation will change that to plans and policies every 3 years, but there is actually no requirement on the Central Bank to do it. And I think that that's a mistake. And I do think that, and I would ask you, has the department considered introducing a similar requirement for the Central Bank so that it would review its credit union policies on a more regular basis, for example, at least every 3 years? And I think that would be welcome.
What I might say on the amendment first, I think it's important just to highlight that this isn't a mandatory change. Boards may still choose to review some policies or procedures on a more frequent basis. The broad thrust of this is by removing the requirement to review it annually. We're trying to allow boards to have more time to focus on matters such as strategic planning, which is probably a more efficient use of board time on a year-on-year basis. The main thrust of this and the other amendments relating to governance is to deliver relief on some of the elements of the current legislation, such as the lessening of the minimum number of board meetings and board oversight committees. And I think we've discussed that at second stage, Deputy, and I know you were in broad agreement with that. I think it's very important to highlight the point around the central bank analysis. It's certainly correct. Certainly, first of all, that's a matter for the central, a mandatory provision would be a matter for the Central Bank Act, as I know you're aware. However, I think it is important to say that the Deputy will be aware that there is the ICERN review going on at the moment in relation to central bank processes in relation to credit unions, and that's important, and that process can be fed into. Certainly, CUAC would have highlighted a number of areas where they would have expected to see review by now, and that is an ongoing dialogue that I and Minister McGrath will be having with the bank in relation to making sure that we have the best responsiveness to some of the changes that are happening in the credit union movement, including, importantly, in this legislation. But a mandatory provision such as that would, of course, be a matter for the Central Bank Act, as I understand it.
Yeah, it would be a matter for the Central Bank Act, but it's a matter for us to actually insert it into the Central Bank Act, and then for the Central Bank to fall in line with the law of the land. So just as we're setting out a legislative provision that that credit unions have to review their policies and plans every 3 years, we don't need to do that. The Central Bank could just actually, mandate them to do that. But we're deciding as legislators that from a point of safety and people's money's in there, that these plans and policies should be reviewed every year, and it's a legislative issue. We can do the same with the central bank. I raise it because it is worthy of consideration, and going back to my earlier point that there has to be a common purpose between the movement and the central bank in relation to how we develop. And sometimes as legislators we pass legislation and then we find that it's kind of been frustrated out there. The will here hasn't materialised, and hopefully that doesn't happen with this legislation. So, you know, a bit of certainty and a bit of review where the policies have to be reviewed every 3 years. Not that I oppose it, but can I just ask you to put on the record the rationale for dropping the requirement in its entirety to review the procedures at central bank at credit union level. Now the legislation will only require plans and policies to be reviewed.
Every 3 years, I think the Deputy said every year, so it's every 3 years. So we're lessening the burden on the boards, and the purpose of that is to enable them. The view is that the review on an annual basis has been too onerous for boards, particularly for voluntary boards, and that the balance is just slightly off, and that every 3 years at a maximum is acceptable. However, of course, it's available to do that more regularly should they wish to, and that's the rationale.
Yes, I understand that completely, but the question is that you're changing the requirement from 1 year to 3 years for plans and policies, but there is no requirement now to review procedures at all in legislation. And I'm just asking you to put on the record the rationale of the department for that.
It's aligned with the broad changes for the distinction between the board and the professional management. Procedures themselves are a question for the day-to-day management and the CEO of the credit union, and not really properly a question of board for the board, which is more of a governance and strategic policy function. So I suppose our view was that procedures was too granular work for the board in any instance, and that's properly dealt with by a professional CEO and their team, their credit team, and so on, and that the board's work would be focused on more strategic work, plans and policy, ESG, how that's working, and that would be and this broad proposal was in fact raised by CUAC at an earlier stage, and it's on foot of their recommendation that we're doing this. But it's aligned to other amendments where we're trying to separate out in some part the professional role of the CEO and the operational responsibility that they have on a day-to-day basis, and a more strategic function for the board for the future.
Thank you. As I said, I agree with the actual dropping of that measure, but I think it's important to put it on the record, the rationale behind it, and I welcome that. Thank you.
Thank you, and I can't comment from this position other than to say that, yes, from past experience, careful regard has to be had for movements in the vulture funds and moving into the mortgage area, and the drift towards ever-increasing mortgages, and the extent to which that can virtually cripple the borrowers in the marketplace at any given time. With particular reference to that, for instance, we all spent 19%, 20% on interest rates in the past, but there's a difference. Now the investment is much. Some of us are as old as you, Bernard. Well, should all relax on that one, I can tell you. But the fact of the matter is that it can have an appalling effect, as we now begin to see, on individual borrowers all over the country. And there should become a competition between the vulture funds or investment funds, or whatever we call them, and the pillar banks and the credit unions. We could have a big problem on our hands that could escalate very, very quickly. So the interest rate now is on a much, much bigger asset in terms of, for instance, you could, in certain cases, it could be interest on £1 million borrowed. That'd be unusual. On certain parts of the country, it might happen. But on $500,000, it's not so unusual. And certainly on 200,000 or 300,000, it's not unusual. And that mounts up very fast for the borrower, who may find it blowing up in their face with a huge demand, increasing on a monthly basis. It doesn't go away. It's one of those things that we need to watch. And particularly the antics of the current attitude in the vulture funds who seem to have adopted a new policy, get tough policy, and we may have to visit that again in another sitting of the committee. I certainly would like to see that. Thank you. So I'm presuming again that section 6, as amended and discussed, do still stand part of the bill. Agreed. Section 27. Section 26 gone. Section 27, no amendments. And the question is that section 27 do stand part of the bill. Is that agreed? 27. And we turn over the page. And we are now on section 28. Amendment 27, Nana Montara, as already discussed with number 1. So the question that the amendment be made. Is that agreed? Agreed. That section 28, as amended, do now stand part of the bill. Is that agreed? Agreed. Section 29, Nana Montara, as already discussed with number 1. And the question is that the amendment be made. Is that agreed? Agreed. Section 29 as amended do now stand part of the bill. Is that agreed? Section 30 in Nana Montara again, as already discussed with number 1, and the question is that the amendment be made. Is that agreed? And the question is now that section 30 as amended do now stand part of the bill. Is that agreed? Section 31, no amendment. And the question is that section do now stand part of the bill. Is that agreed? Agreed. Section 32. Amendment 30 in Nana Montara, a new section as already discussed with number 1, already discussed, and the question is that the new section be there inserted. Is that agreed? Agreed. And section 30, amendment 31, as already discussed with 1, and the question is that the amendment be made. Is that agreed? Agreed. And the question now is that section 32 as amended do now stand part of the bill. Is that agreed? That was a good page. And we now go on to section 33. And amendment 32 in Nana Montara, as already discussed with number 1. And the question is that the amendment be made. Is that agreed? Section 33 as amended do now stand part of the bill. Is that agreed? Section 34. Amendment 33 in Nana Montara, as already discussed with number 1. And the question is that the amendment be made. Is that agreed? Agreed. Section 30, Amendment 34, as already discussed with number 1, and the question is that the amendment be made. Is that agreed? Agreed? Agreed. Amendment 35 in Nana Montara, as already discussed with number 1, and the question is that the amendment be made. Is that agreed? That leads to that section 34, as amended, do now stand part of the bill. Is that agreed? Agreed. Section 35, no. It's a new section, and the question is that the new section be there inserted. Is that agreed? Agreed. And the question is that section 35 do now stand part of the bill. Is that agreed? Agreed. Section 36, amendment 36 in Nana Montara, new section as already discussed with number 1, and the question is that the new section be there inserted. Is that agreed? Agreed. And section amendment 37. As already discussed with number 1, and the question is that the amendment be made. Is that agreed? And that leads us to that section 36 as amended do now stand part of the bill. Is that agreed? And we've got to do a good page there now. We now move on to section 37, no amendment. And the question is that section 37 do now stand part of the bill. That's agreed? Agreed. Section 38, no amendment. That section 38 do now stand part of the bill. Is that agreed? Section 39, no amendment. And the question is that section 39 do now stand part of the bill. Is that agreed? Agreed. Section 40, no amendment. And the question is that section 40 do now stand part of the bill. Section 41, amendment in Nana Montara, amendment 38, new section as already discussed with number 1. And the question is that the new section be there inserted. Is that agreed? Agreed. That section 41 do now stand part of the bill. Is that agreed? Agreed. Section 42, amendment 39, Nana Montara, 39 to 45 inclusive, 48 and 51 are related and will be discussed together.
Thank you.
On Tara.
And I move Amendment 39, and that amendment is grouped with all amendments in Group 5. The grouping addresses the following issues: organisational matters regarding the delivery of notices of meetings, documents, annual accounts and the calling of meetings, quorum for a general meeting of a corporate credit union, removal of references to he, his, him, etc., changes to the processes for small payments on death, and the insertion of the 6th schedule, which are the matters to be provided for in the rules of a corporate credit union.
That's it.
That's okay.
That's Amendment 39, Section 42. 39 to 45 inclusive, 48 to 51 are related, and all discussed together.
Yeah, those amendments are welcome. Obviously, there are issues in terms of gender and some other constitutional technical amendments, so no issue if you want to go to the section.
All agreed? Ada? Agreed. So that's Amendment 39, as already indicated, 39 to 45, 48 to 51, and the question is that the amendments be made. Is that agreed?
Yes.
Agreed. And the question is that Section 42, as amended, do now stand part of the bill. Is that agreed? And now we turn over the page again into Section 43, Amendment 40. I may have said inadvertently Amendment 39. It is Section 42, Amendment 39, which we've already discussed and we've agreed on. Section 43, Amendment number 40, inanimate Thara, as already discussed with 39, we just passed, and the question is that the amendment be made. Is that agreed? 41, Amendment 41, as already discussed with 39, and the question is that the amendment be made. Is that agreed? Agreed. Section 43 is amended, do now stand part of the bill. Is that agreed? Agreed. Section 44, on Section 44.
There's no amendments,
yes.
is there?
Section 44.
All right, take the
there are
amendment
amendments,
first.
as
All
already
right,
discussed with 30, we discussed with 39.
Yeah, agreed.
Agreed. So the question is that the amendment be made.
Agreed.
Agreed. That Section 44 is amended, do now stand part of the bill. Is that agreed?
On Section 44.
On Section 44, as amended.
As amended. Yeah, so look, again, this makes complete and utter sense from a administrative burden, from a climate change burden and all the rest. We get these packs coming out annually from our local credit union with all of the details and a lot of paper and so on and so forth. And I would imagine for a lot of people, they just go into the recycle bin. And for some, it might scrutinise them, but in today's age, it makes sense that where members are acceptance that may not need to be posted out and that they can be published on a website or elsewhere. My question for you is the provision which is contained within this section that allows for the consent of members to be sought and given to move from a paper-based to an electronic-based form of communication. Just clarify, it doesn't stipulate how that consent must be provided. So should it not be very clear that that consent should be provided in the same manner as the credit union provides the information heretofore, i.e. you can't seek that consent. A credit union can't move from a paper-based model to an electronic publish on the website for everybody to go and find by emailing its members or publishing it on the website or whatever. If they're sending out the communication by paper, they should look for the consent to move away from that process using the same method. It's just a point that has been raised with me, and I think it should just be. I can imagine that many people will be happy to get less paper and maybe get the email or publish on the website, but just to make that point.
Agreed?
It's a logical point. I mean, we haven't been prescriptive about that in the legislation, but obviously that's a matter for the credit union. There's certainly very strong logic to what you say. I'm not sure it's necessary for us to put that in legislation, but our provision is broad enough to enable that.
Yeah, okay, like, you know, the legislation does contain other provisions and has contained in the past, like where we stipulate that it has to be in writing, that it has to be, you know, by certain types of communication. So, again, it's valuable information that members have. Again, not a lot of members will look at it, but some members cherish that information and knowing what the shares are in terms of the credit union, what the loss, the profits and all of that kind of stuff. So if you're moving away from that, anyway, I've made my point. I'll leave it at that. I just think it is worth consideration in terms of whether we should state that they should seek that consent in the manner which they are used to communicating with their members heretofore.
Just to, if I may, to clarify, this deemed consent, the member can refuse. So if the member chooses to continue to get information in the same way that they have preferred and enjoyed in the past, it's absolutely available to them.
Yeah.
Yeah. So it's not a de facto shift or switch off. They will still be able to do that if they wish.
Yeah.
Yeah. But we're not prescribing, sorry, as I understood what you're saying, is that we must prescribe the manner in which the member responds or gives consent.
And if there is no consent provided?
Then the member is entitled to continue to get the information in the way that they've had in the past.
Including annual accounts?
All of it, yeah.
All of it, okay, okay.
Thank you.
And just, can I make that as in, if no consent is given, i.e. somebody doesn't respond, which, you know, many people would be probably happy with electronic communication, but they just won't respond, you know, or I'll do that next week or whatever, so they'll just have to get it the same way as in the past.
The member will have to respond, yeah. Yeah. No, the member will have to respond to give consent. You have to positively give consent. So, you know, you can imagine in practical terms that might very well be done the next time the member comes into the office, for example, and signs it. And you're trying to find the most practical solution. So perhaps somebody emails, perhaps somebody provides a response proactively in the post. Perhaps somebody comes in and signs it the next time they have a transaction. It's about trying to, you're making a big shift with a lot of members, and it's for the credit union to work out practical ways of trying to achieve that. But what's important is that the member has a discretion to continue to receive information in written form if that's what they prefer. The broad thrust is to try to reduce the overall burden, as you said, environmentally and in terms of procedures.
Yeah, I might be,
admin.
Chair, I might be thinking of wrong, because in some cases, you know, like any organisation, a lot of members won't be engaging with you till they need you. You know, they know the credit union is there when they need it, but they might disappear for 2 or 3 years, and probably wouldn't be in the habit of popping in or responding. So I presume it's the other way around, that you'd have to say you want to remain. We allow for the change here, but the member would have to look for it in the traditional way, I presume. Because we won't get the mass change we like from a greeting point of view if it has to be. I could be wrong, but I'm assuming quite a lot of members don't engage weekly or monthly or yearly.
We're enabling that it can be a response in writing, whether that is written, hard copy written form, email response. We are providing the broadest enabling measure. It will always be available for a member of the credit union to request at any time in the future that they
That's
request
my,
annual
that's how I read
accounts
it. Yeah,
conveyed in writing in the future. So we're as I said, so a member can respond in email, writing, and then they may at any time withdraw the previously given consent to get it in
That's how I read it, yeah, that's fine.
Sure, yeah.
Yeah, that is different.
Yeah.
You know, so basically the member who's getting the communication by paper, just to clarify this here, may not get the communication by paper in the future, but it would be up to them to actively look for it again.
But they would have first had to give consent to stop getting it in paper. And then they may withdraw that consent and return to getting it back in paper.
Okay.
At any time in the future. If that's
So
what they
notice
want
of
to do.
AGMs, notice of AGMs, notice of extraordinary AGMs, annual accounts, and all of that, a credit union will have to provide that on paper to members unless the member consents not to receive it on paper, forever and a day. That's what the legislation is going to say, is it?
So let me double
Yeah,
check.
no,
what
that's
that
okay.
is, but
Just-
that's
just-
okay, yeah.
I took it
Yeah.
the other way around.
The other way right.
Yeah. But if there's any issue to be clarified, maybe we could do a report stage, because it would be better if it was the other way around.
Yeah.
Is that agreed?
Sorry, just going back through it here.
Yeah.
By electronic, sorry. It's 188, sorry, the changes to 188A, Subsection 1, paragraph C, by electronic means to such address has been notified in writing. So the provision is there, yes. But look, do you want me to come back and clarify it in sort of
before-
step 1, 2, 3, 4 before report
Yeah,
stage? Yeah.
I think that would be
Yeah.
helpful before report stage. Thanks, William.
All right, that's agreed, and we now move on. That section, I have already put section 44. Then the next one is section 45. Amendment 43, Nana Montara, is that new section agreed? Agreed. And Amendment 44, Nana Montara, as already discussed with 39, is that agreed? Agreed. That section 45